Before we start, I thought let's do a little dipstick poll because we're going to be talking about cryptos, blockchains. So ladies and gentlemen, please raise your hands. And we don't really have anyone from the tax department, so do not worry about that. How many of you have bought a crypto in your life? Please raise your hands if you have. I can only see less than 10 hands. How many of you have wanted to buy a crypto or an NFT but have not? Oh. Itna bada market.
No, definitely a big market.
That's what they call TAM, right? In the startup world, targetable addressable market. I'll tell you what, at the end of the session, we'll do another one. How many of you want to buy crypto? I think that would be fair.
That would be fair.
We'll know how convincing you are. Okay. First up, how many times in a day are you asked, what is a crypto? What is a blockchain? Do you have a definition ready?
I think yes, and the answer depends on where I am, in which city I am. Bangalore is very tech focused, so they understand a lot of it, and I'm not, putting a bias
What about
here.
Mumbai? We are in Mumbai. Where do they stand?
I think Mumbai is number 2 in my list, and third would be Delhi.
I'm from Delhi, yeah. I get it. Okay, so Mumbai is number 2. What is the definition you give?
So I think I can go with the textbook definition, or I can go with an example, and I felt that examples work better. So to understand what is blockchain and where does all this crypto comes in, we have to understand how internet companies are formed, right? 15 years ago, if you were to form an internet company, what would you do? You will probably order servers from somewhere, set it up in your garage or in your office. It will probably take 2 months to connect it to the internet and then host your business online. In Web 2, Amazon came along, said, oh, you don't have to do all this. I have all the servers with me. Why don't you host right on AWS? But I will take a cut of your business. And that's how Web 2 companies were formed. What is happening in Web 3 is that as we are talking, all our phones, laptops are sitting idle. With blockchain, you can connect all of these phones and laptops and create a network where now these new companies can host any business online without actually needing a centralized service like Amazon. But why would I give my phone to a network? What am I getting in return? And that is where crypto comes in. Crypto is an incentivization layer on top of this network, which makes us be part of this network, right? And as this network grows, the business gets the benefit, the participant gets the benefit on creating these networks. So the value chain doesn't end at Amazon as a centralized company, but everyone who is now part of this ecosystem gets equally benefit. So it's like owning a share in the next Amazon, the next Google, the next Microsoft of the world. So that's where blockchain and crypto are so important.
So Ashish over lunch also told me that his mother's 69 years old, almost 70 years. Yeah, mom is 66 and father is almost 70 years old. Tell me, have they understood, because they understand Amazon, have they understood what their son does, what CoinSwitch is, what crypto is? Because that'll be like a ready rec now, right?
Definitely, and let me tell you a story, right? And when we started in 2017, what we wanted to do is to simplify crypto. And simplification doesn't have an objective, right? So it's subjective. What is simple for you may not be simple for me or my parents. So we said to ourselves, the moment our parents buy crypto is the day that we say we have made crypto simple.
Have you got it?
So let me complete this story. For the first 2 years, we worked very hard, built a crypto-to-crypto exchange. In 2020, when the RBI ban got reverted by the Supreme Court, we decided to come to India. Built a product called CoinSwitch Kuber, which helps you buy and sell crypto with a click of a button. The problem in the India market was that people are used to buying food online with a click, booking a cab with a click, but crypto was still complex. You have to go to an exchange and send complicated graphs and order books. That's where we launched Kuber, helping you buy and sell with a click of a button. And within the first 7 days of the company forming and launching CoinSwitch Kuber, my mom registered on her own and bought her first Bitcoin. And that was a crazy moment for me personally. And that's where we knew that we are on to something much, much bigger. In the last 2 years, since that point, we have grown to over 1.8 crore Indians registered onto our platform today, one of the biggest crypto platforms out there. And
what do you mean by registered?
Register means they come to our app, download our app with their phone number, they verify their phone number and enter and start looking at crypto education, crypto content, and start looking at investing into crypto.
So you have, that's a way of saying you have 18 million registered users, right? The government, I remember after the union budget, whether it was the finance minister Nirmala Sitharaman or whether it was the CBDT, they were using figures like almost 2 crore Indians are investing in cryptos. So next question is, and ladies and gentlemen, many of you who are not investing, you can understand where we're going to next. What will it take for cryptos to become mainstream? Because, you know, everybody who's in the crypto world is saying, we don't need to be mainstream. We are the rebels. We are decentralized. We are on our own.
I think we have to understand what mainstream means. If you look at investment, crypto has more investors than stock market today in India. The figures, or maybe closer to that, right? Do you call this mainstream? Some people may say yes, but I would say no. Crypto is much bigger, is an investment class, but it is forming companies which would be the next Google, the next Facebook, the next Microsoft of the world, right? So 20 million is not enough. It's a billion people industry, right? It's the new internet itself. And when there are billions of people connected in the crypto, in the blockchain ecosystem, that's where I call it mainstream. To go to mainstream, I think there are a lot of processes are required. Today the industry is retail heavy. Our retail investors believe in crypto, understand the need of crypto and investing in crypto. But a lot of institutions need to come in, government bodies, regulatory bodies need to come and form those regulations which would promote forming the next Google from India and on blockchain and dominating the world, not just, you know, doing business in India. I think we have a long way to go.
You're talking about it'll become mainstream and let's say it'll become institutional when companies, MNCs, Indian companies start recognizing, taking payments, but they can't do that till they are not allowed to.
It's not payments. So I think what budget has done beautifully well this time is to segregate the currency use case and the asset class use case. Crypto, although was started as a currency, and that's why the word cryptocurrency come into picture, but it ended up solving something much bigger than that, right? Today, crypto is forming the new internet. So like the example we took about hosting, there are similar examples about, say, loan as well, right? One example I love to take is, you know, when I look back and say if I were to go to a bank or Mukesh Ambani sir goes to a same bank, we would be treated very differently. Although the rules of the game are simple, are written on paper, but a bank manager to establish a relationship would work very differently with me versus sir, right? But with crypto, what would change is that these rules are now written in code. Anywhere in the world, you would be treated equally, right? And that's what is forming the new internet, which is equal, which is not just read and write, which is ownership of your data and making sure that everyone is accepted equally across this internet, right? And that
is that why you got into it? कि मुझे मुकेश अंबानी बनना है इसलिए दुनिया का?
So I didn't come in because I wanted to be Mukesh Ambani and I am far from him. And I think why I came personally into it is because I'm an engineer and I'm an introvert. So for me, working with people, I don't understand people so well. I understand code very well, right? For me, what Bitcoin opened up for me is the new world, where you don't have to trust or rely on people, where you have to trust and rely on code, which as an engineer is the default nature, right? So the equality that we can create through crypto and blockchain ecosystem is what attracted us. I come from a middle class family and I believe that in the Indian middle class is always given the short end of the stick. And I feel that crypto can create that equality, that all of us are equal. Anything, even if we want to take a loan, we should be treated equally. Anyone we want to create financial freedom, financial connectivity, all should have the equal rules. And I believe blockchain and crypto can definitely do that, working parallel or working in conjunction with the traditional finance. So it's not creating an alternate finance, it is merging the finance and making it more open for everyone.
So then if you're talking about equality, wanting this inner thing of everybody should be treated equally, then why are the crypto guys crying about paying tax? All of us pay tax, whether we're in stock markets, invest in gold, invest in mutual funds, invest in property. But you don't want tax for cryptos, but you want equal treatment. Ye kya hai?
No, I think there is a difference, right? We have always welcomed tax. Taxation is something that we believe is the right of the government, and we are happy to, and we have always welcomed taxation. Taxation actually brings clarity into this space. But what we are also saying is that how this asset class is getting treated is unfair. The 1% TDS, today in this market, a lot of users make 0.01 to 0.05% as profits. If you ask them to pay 1% TDS at every transaction, then their capital will get locked up. The opportunities that they have to invest in this market will go away. Second, treating it as an asset class, maybe equating the taxation to securities, the stock market, would be more fair. 30% is a bit higher, and that's also you can't offset across crypto.
So you're saying it shouldn't be 1%, it should be lower, is what you're saying?
Yeah, the TDS should be lower, and the taxation also should be closer to other asset classes.
Okay, so you don't want that arbitrage to actually exist. And this brings me to my next question. Actually, I have two questions left. One is, you drew parallels with stock markets, etc. Now, we've made a lot of strides in the stock markets, but we still have a long, long way to go. Especially the last 2 years, the penetration has been fantastic for the stock markets. And we talk about risk-reward ratio. Ab crypto mein kya risk-reward ratio? Because the risk is so much more. We don't know. Ban aayega, ban nahi aayega. Kya tax hoga, ye 30%, 50% ho jayega. Ye coin fail ho jayega. There was some robbery in one of these altcoins also recently that we saw. So the risk is far more risky.
So every asset class comes with its own set of risk and rewards, right? The gentleman before me was talking about small caps. Small caps have similar fluctuations, similar risks as well. Like we said, that crypto is like investing in a new age startup, right? So it's definitely risky, but it's the new internet. It's unavoidable for that matters, right? And you don't have to put all your eggs in one basket of crypto. Your portfolio should be diversified, but your portfolio should definitely contain crypto, because that is the new asset class in the making. It definitely has a higher risk element to it, and be ready that, if you lose your funds, then it can happen in this asset class. But there's also an opportunity that what if it creates the next internet? And then you are early to that investment, and that gives an edge to your portfolio.
There's also concerns, right? Crypto's bad. It'll fund terrorism. It's going to be used for money laundering, illegal activities, kidnapping. What do you have to say to that? Because it cannot be traced. You all say it can't be traced.
So that's a misnomer that it can't be traced. Crypto is one of the most trackable systems ever built on the planet, right? I don't know if you know, FBI have caught a hack after 4 years because they were tracking all the transactions on the blockchain. And crypto by default is peer-to-peer, so all these cases of anonymity and transfer to anonymous wallets do exist. But there are solutions, and regulations are the solution to that problem, right? Creating exchanges who are regulated and making sure that the user protection is at the highest. They're doing KYC, AML checks, PMLA checks, and making sure that they're creating an environment which is more welcoming, which is the white market. And people are not moving away to peer-to-peer or international exchanges to avoid taxation, to avoid any tracking and tracing, right? So regulating is probably the right way in making sure that more clarity happens in the space and more tracking can happen in the space.
The one question which the Janta will want to know. Bitcoin or Ethereum?
So, and obviously these are my personal views. Don't take it as an investment as wise. 60-40. Right, is the rule that I always follow. 60 Bitcoin and 40 Ethereum.
No Solana, no Cardano, no Dogecoin.
So if you are an investor who have learned what is Bitcoin and what is Ethereum, then move on to the next stage, which is 50, 30, 20, probably, or based on your risk appetite, 50, 40, 10, which is 10% in the lower end segment as well, and started diversifying. I think it is very close to the equity market. How you do large, mid, and small. I think those strategies work very well in the crypto market as well.
Should we do the survey? Have people been convinced? Are you going to be looking at cryptos? Because we did a dip survey before. So ladies and gentlemen, if you were not planning to buy a crypto and could look at buying a crypto, please raise your hand. Or if you want to buy a crypto, so at least he gets an idea.
Awesome.
I think a big conversion.
I think my investors should look at my valuation with probably triple just by looking at it. So yeah.
Okay, so with that, Ashish, I'd like to thank you. Thanks so much for also demystifying crypto and blockchains. Next year, if we see you back here, we'll do maybe a masterclass on what blockchain is.
Definitely.
Do you get that a lot?
Definitely.
Let's understand the construct of the economy. In the month of Jan, it appeared that we were in a swift recovery mode. oil prices were under control, the fiscal deficit was looking strong, corporate capex was looking decent. But now the world has taken a 180-degree turn. Is it time to get worried? And is a bullish person like you also slightly worried?
I'm not worried. I'll tell you why. I think two, three things are at play here.
Let's understand the construct of the economy. In the month of Jan, it appeared that we were in a swift recovery mode. Oil prices were under control, the fiscal deficit was looking strong, corporate capex was looking decent. But now the world has taken a 180-degree turn. Is it time to get worried? And is a bullish person like you also slightly worried?
I'm not worried. I'll tell you why. I think two, three things are at play here. One, I think, is a change in mindset that has been that's clearly seen across India, and not just companies, but the individual level. So you have a mind which is reset, is receptive to new things, receptive to technology, and across age groups. Typically, we said technology is where the 20-year-old mind or the 15-year-old mind plays. But today you will see 60 and 70-year-old people perforce using technology. So that, I think, creates a whole lot of new opportunities. So that's going on. You would have seen what's been happening at the corporate front. After the second quarter, post the first lockdown, we could see EBITDA levels jump by 25%. And they have persisted over the last 7 or so quarters. I was just tracking yesterday the numbers of this last quarter for the companies which have declared numbers. That's probably not the full set of the large companies. But I'm seeing a 17% jump in EBITDA continuing. So at the corporate level, I think they are producing something heroic in terms of efficiencies and product, which augurs well for the economy and allows them, I would say, the muscle to withstand any shock. Yeah, there are external challenges. And we will see how these are handled, particularly in the context of inflation. But there again, if you see the policy stance of the central bank to hold interest rates, keep liquidity, I think adequate. I think it's fit for purpose policy over the last 2 years. And we will see how they will play out this somewhat of a jump in inflation.
Let me draw the big picture of the entire banking sector. PSU banks, some would argue that they were forced to consolidate, but consolidation has happened there. Private banks, HDFC Limited and HDFC Bank, big consolidation there. And then you've got the fintech piece, which in a sense has become very large. So as we move into the next credit cycle, as country becomes more digital, which piece of the banking stroke financial sector you're most excited about? I will not give the answer of saying all three, sir.
If we had this conversation 6 to 8 months back, Nikunj, I would have said the fintech piece, because they're coming on strong. They were doing things right. But somewhere I see that not just the fintech piece, the entire digitex piece, there is a challenge that is now very visible. And the challenge is, I put it as follows. It's a challenge between the value that has been created in each of these enterprises. Undoubtedly, enormous value has been created, which the incumbents probably, in a way, failed to do. So that has been created. And then there is a valuation expectation. So I think there is a discord between the value and the valuation. Now, when you move from the private market to the public market, and you are not able to show sustained growth, and ultimately sustained growth is bottom line. When you come to that market, you don't count eyeballs, you count the bottom line. For a very simple reason, because this investor is asking a tough question. Are you going to come back to me for money? If you are, I don't want to deal with you. And if you tell me that I don't know when I'll make money, I don't want to deal with you at all. So you have a situation where in this valuation discord, companies, digitech companies will have to understand what is their free cash flow, when is it that they will hit the free cash flow, and how are you going to be punished by the public market if you don't generate them. I hope they are not punished. I hope they are rewarded. But the moment you say, my burn continues, I need more money, and I'm going to come back to you, I think you're going to get a shock. So, connecting back to the incumbent players, not just in financial industry, but everywhere, unless these new cores, the new digital startups, are able to get their valuation expectations right, get their cash flow right, we have a lead time.
My next question, Mr. Kamath, is about corporate ownership in banks. And you've been championing thoughts there, and you've been part of some committees. As India grows, there is going to be more and more corporate participation. What is the easy way out where corporate also get advantage for their investment and the sector also gets fresh capital?
Yeah, I think it's a very interesting question. I'll answer it in two parts. I think given the cleanup of the banking system that has taken place, and other day mentioned this, that we probably have a banking system that is so clean. I have not seen a banking system so clean in the last 50 years. So clearly speaking, you have a squeaky clean banking system, adequately capitalized. And for the current stage of growth, I think it has the ability to provide funding. It doesn't have the size as you jump from a 3 trillion to a 5 trillion to a 7 trillion economy. For that you may need capital, but they continue to do well, that capital will certainly come in. So I would think that the banking system's capital needs will come in without too much of a challenge. The fintech firms will need to learn how to bulk up, because that is going to be a challenge. How do you meet bulk? And they may find a bigger problem in raising the sort of retail resources that you just mentioned, the CASA money and so on. But more critically there, I think it is a question of establishing trust. You can establish, and probably they have established their value in the technology platforms they run. Can you actually say that you have built the trust? I think a bit of a way to go. And I think, again, unfortunately, the last 6 to 8 months have not augured well in that trust context.